Hey guys, Taylor with GammaEdge here, coming at you with a market recap for April 9th, 2025. You don't need me to tell you by now that we had a massive rip in the market today off the news that came out. You can see in the chart right where that happened. Did we predict this massive ramp higher? No, we did not. And if someone tells you they did, I would be very skeptical of that. Having said that, let's get into the pre-market prep to see how we prepare for the day. Just for quick background, no matter what the market's doing, we're always going to go through our same process. The reason for that is A, because it helps us understand when those changes do happen in the structure, and B, it's how we get ready to trade every day. So having said that, if you've been watching these videos for a while now, we always start with the market trend model. Just quick background, I'm not going to go into depth tonight on the background of all this stuff. I've done it for 2 weeks now, so you guys can go review any one of those videos and get the background on all the tools. I will just say quickly, this is built off the tick index, which is a measurement of real-time buying and selling in the market. And we take that data, we create something called the cumulative tick, which is this bolded white line. It's a time series of the intraday ticks, so we can understand the multi-day to multi-week trends. And coming into the day, the short, mid, long-term trends were all decisively lower. We also have something called the filter tick, which is this cyan bolded line up here. This is a measurement when we have plus or minus 1,000 tick readings, and that signifies significant buying or selling in the market. And so over the last 4-day look back period in this chart here, we've had net selling on the day. Yesterday, was decisive selling throughout the session in a linear down fashion. So from this point of view, if you're a bull, structure is broken. Like there's no reason to be swing trading alongside here. Momentum is lower. We're seeing net selling come in most days, no buying at all. So again, until we start to see the cumulative tick trend higher day over day, it's a lot of just sitting on hands right now. Yes, if you have the skill set and you have the experience to try and short this market, then go for it. But the majority of traders do not make money on the short side. That is the reason that we do not promote it in these videos. Plenty of people in the community short, right? But I'm not going to sit here in a public video and tell people to short when the majority of people watching this video don't have that skill set. That is just a fact and a reality. So most people would be a lot better served to go outside and do something else rather than sit and watch the market and do something impulsive that goes against your system, which probably does best anyways when momentum is strong to the upside. And again, that's not shade, that's just fact of the matter, what we see time and time again. And you want to be waiting for your fat pitch, and this is not the time for that. After we understand what the market trend model is saying, we go and we analyze the SPX options market. The reason we analyze the SPX options market is because it is massive, for lack of a better term. It's large, it's liquid, largest options market. Ton of speculation is taking place there. And the options market is forward-looking by definition. So if we can understand what is happening in the SPX complex, we can get a good feel for the overall market on forward-looking expectations. So we always start with the SPX-A. Reason for that is because that's where your monthly and your quarterly expirations reside, as opposed to SPX-P, which is where your daily and your weekly and your zero DTs reside. SPX-A is also a lot larger, slower, longer-term capital is playing in here, so you can think of this as your cruise ship. We came into today with a put-dominant environment, gapping 100 points below where we closed in the prior day. So again, this really just adds confirmation to the market trend model that right now the environment is not constructive to the upside. We have a put-dominated environment. Again, just want to quickly contrast that to a call-dominated environment right here, which is more favorable for kind of upside swings to the upside. Probably had a more constructive market trend model. Back in this historical example, I just show you this to show you what a call-dominated environment looks like, to where we have a bullish foundation, and that is certainly not what we have going on right now. So you heard me talk about it before, but then we move on to SPXP. Again, this is the PM settle complex. This is where your, again, 0DT dailies and weeklies reside. It is smaller than the SPX-A, so shorter term speculation goes on here. So the way that we think about it, our progression goes, first the market trend model is going to turn, then the SPXP, then the SPX-A. In terms of our market turning framework, that's the reason that we repeat the same thing every single day, because it's a tried and true framework, and it helps us observe when those shifts in the market are occurring. Right now, they're not. Again, put-dominated environment. So again, with the market trend model the way it is, SPX-A and SPX-P the way that they are, this tells me at least that I'm really going to shorten up my time frame and mostly just me trading on an intraday time frame, going home flat at the end of every day, especially with the VIX between 30 and 50. Right, and again, if you're not experienced trading VIX 30, 50, we've seen it over the past few days. You can get 25 to 75 0.5-minute candles. Like that's a huge range. And if you're not familiar with that, then you can be partying with your capital to market very quickly. A couple other sentiment indicators that we developed at GammaEdge that are part of our market trend framework. First being the GEX ratio. If you're not familiar with that, that's just total call gamma relative to total put gamma in the complex. Think of it like the put call ratio, but it is superior. The reason it's superior is because gamma inherently adds a time component. Remember, gamma is most concentrated at the money and near expiration, so it naturally is self-selecting to more near-term expirations. So as an example, if you put 1 million puts on 2 years out, that's going to register in the put call ratio as a massive spike. But in the GEX ratio, that's not going to have much of an impact because that is so far out in time that that's not going to impact the kind of immediate to short term, which is for us traders what we are focused and concerned on. Right now, we can see the ratio is at the lowest it's been in the past 150 days. So this tells us that calls are not interested at all in coming into the market. And with the ratio below 1, again, puts are dominant in the market as well. So going forward, what the bulls want to see is we want to see a sustained move higher and then eventually getting above 1, progressing higher as well, which tells us call speculators are back in control and that control is getting bigger. Right, because with a lot of our tools, the rate of change and the day-over-day change is important. Are things getting better or are they getting worse? Another tool that I haven't hit on before, but I want to hit on quickly here. This is what we call the delta balance. Effectively, what we're looking at is remember that the options market are forward-looking, so we can look out into those forward expirations to understand the sentiment between call and put speculation. Most important thing to note here is in the future out expirations, which are these, they're noted with the stars. It's the next 4 SPX expirations. We can see that the net delta balance, which is the blue dashed line, which takes into account what's happening in the above spot price and below spot price, is at -1. And with this oscillator, that is the lowest it can be, pinned at -1, so that is a very put dominated environment. So looking out into the future, we do not see calls starting to dominate the complex at all as of right now. Well, really as of this morning. So again, right, wrong, or indifferent, with our tools coming into the session today, from an overall kind of point of view, right, medium to long-term point of view, things are pessimistic, puts are in control. We are not looking to be long the market right now by any means. Just as one more kind of antidote, we run something called a bull and bear list every day, which looks at call and put speculation to find those equities that are either call dominated or put dominated. And there was one stock that showed up on the call dominated list today. That was United Healthcare. Just to show you, here's the put dominated list. I mean, we had everything from the high beta Mag 7 names to the consumer staple names like McDonald's, Home Depot, stuff like that. So that just tells you kind of baby's out with the bathwater right now and everything is put dominated. And then here, for the sake of completeness, this is the SPX 0DT structure. Again, we were gapping, 100 points below where we settled in the prior day. And right, coming in from yesterday to today, those speculators in 0DT, they're positioning around where spot price settled last night. So the meat of the complex was built around where spot settled. So when we gap down 100 points or gap up 100 points or whatever, significantly far from the settlement price, that's going to be really far from our transition zones. And again, that just indicates that the rubber band is very stretched in the 0DT complex. So this is where we expect more disorderly price action intraday as opposed to more orderly price action, which if you would go back and look at our videos a couple weeks ago where it's very controlled and methodical around our transition zones, that just isn't the case right now. And then again, you can see up here, we were an expected move of 250 points today. So with the VIX at 30, VIX at 50, there's a wild expected moves. And again, just as kind of an education point, we're in a significant put dominated environment. So the risk here is that puts monetize because they're significantly in profits, which should add some, incremental buying pressure to the market just on a 0DT basis. And so that's just one of the scenarios that we talk about. And then obviously we would see that buying ideally come through our intraday volume analysis. And then the market trend model could also support that if that were to occur. However, as we know over the last couple of sessions, we've been in this environment, but our market trend model that we hit on in the intraday volume that we've hit on in the past couple of videos showed us that, the speculation was still to the downside. So with that, you guys should now have an understanding of the framework and the tools that we use to arrive at that framework in the pre-market. And then right today, in intraday, we were really just, consolidating around the opening print, which is the blue line around 5,000, which is the key psychological level, well within yesterday's range. So, all this choppy price action was normal. I say normal, but that's still like a 100-point range that we were operating in to start the day. And then just candidly, I got chopped up a little bit in here because when we lost 5,000 and we were starting to lose the opening print, I thought we were going to have a little bit of a meltdown that we saw yesterday. Like obviously, you can't predict you're going to have a meltdown of this size again today, but I thought there was still, more downward action just because it was a put dominant environment. But obviously that didn't come to fruition. Take a little loss, move on to the next trade, right? And so, I wasn't super eager to try to get short again in the market unless we could, decisively lose the opening print, which again, you can see price respected throughout the session. Then I'd love to tell you that I caught this move higher, but obviously did not, pretty hard, almost impossible to predict that unless you had some kind of, information beforehand. But nonetheless, what we can do is we can understand what our tools are telling us after the move happened. And so with that, just reverting to our market trend model really quick, we can see here this neon line that's RSP, which is the equal weight S&P. We can see that gap significantly higher. Market trend model on an intraday basis trended higher. We started seeing some filter tick buying, significant buying coming in. So at least this told me here, trying to short into this was probably not the smart move on an intraday basis because they were kind of buying this move, or at least there was significant buying, whether that was, those puts burning up on the 0DT basis, closing those puts, whatever, real buyers coming in, whatever it was, we were seeing pressure to the upside. Then, right, just showing our intraday volume analysis real quick for you guys. Here's what it looked like before we saw the massive move higher with the news event. If you're not familiar with this chart, what we do is for the SPX 0DT volume, we aggregate all that volume data on a 5-minute basis, 5-minute by 5-minute throughout the session. We aggregate that data, we understand the distribution, we find the middle point of that distribution on a 5-minute basis, what is called the centroid. We do that for both the call and the put side. We plot that on the graph every 5 minutes, we connect the dots, and we then form these solid green and red lines for you. And again, what those do is that symbolizes one way or another the behavior of call speculation here and put speculation here. So here's an example at 12:30. We can understand the behavior of the call speculators has been sideways to down. There's really been no sustained impulse higher. And then with the puts, again, here, this has been sideways to higher. There's really been no impulse lower. So this is just your classic kind of chop signature. And you'll see these dashed lines. These are called the lines of best fit. These are simply just linear regressions to our centroids. And what this does is this helps us understand, all things equal, if the call speculators continue to behave in the manner that they have been from the open to 12:30, price is likely to, that call centroid is likely to continue down this path. Same logic for the put side. And this helps create guardrails on where path is going to go, not path, where price is likely to go for the remainder of the session, all things equal. And so today, obviously, we had the massive news event and it spiked higher. That cannot be predicted again. But at the time, this is what our tools told us. And then remember, the market trend model then started to significantly spike higher. Intraday volume analysis started to move higher as well. Once price did go, then, the speculators were reacting to that. And at least what that helped us to do is understand that, during this part of the market, things were moving higher. So it really helped us, not wanting to, get greedy and try to short something. Obviously, yes, I know, this is a huge range. So, if you just shorted one of those candles, like you could have made a lot, right? But I would say that's more luck-based than skill-based. For the majority of most people that would try that. And again, volatility is just jacked up here as well. But again, if you were trying to, get into this, participate in this, then at least our tools would have told you that, hey, the market is moving higher right now. So looking for some kind of higher low like we had here would have made sense. Now, I did not get into this higher low here. I actually got into this consolidation right here because that is like super tight risk right here. And then like this, I don't know how many of you guys saw this gap higher, but this gap higher in the 5-minute candle, like, don't know if I've ever seen a gap higher like that before. That was pretty crazy. But yeah, that was today. Another just crazy day in the markets. It's been real fun though, every day coming in to see what happens with volatility at these levels. It has presented a lot of good opportunities. Keep in mind, just because VIX was at 60 and it's at 33 now, like that's still pricing in an expected move of 2%. So that's still a huge range. So no one should be getting complacent at all right now. And just because we got that move higher today in our market trend model, in the immediate short term, it's kind of flipped its trend. We by no means are expecting the next great rally to happen. Sure, you guys have seen the stats on Twitter already, but go look at back in history on how many times you've had like a 10% rally, then what is to follow. Generally has not been good. And again, going back to our market timing, our market turning model, really nothing here suggests that the market has turned at all. Yes, our market turn model has, but given the conditions of SPX A and SPX B, how they are so put dominated, DEX ratio is bumping along the bottoms. A ton of progress has to be made on thawing out in the markets. Call speculators becoming very evident that they're coming back into the structure before we are looking to get long on a swing trade basis at all. So again, myself, I'm still going to just be looking for mostly intraday trading sitting on my hands in terms of swing trading until those conditions start to thaw out and those stocks that we want to see start coming back on our bull list. So with that, you all have a great night. We'll talk to you later. Thanks. Bye.